LP, the company is absolutely swimming in cash, a wonderful attribute.
Yeah.
They have more cash available to them than they actually have uses for the cash. And increasingly, they're being polite and returning the surplus cash to its owners by way of dividends and buybacks.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today, we have back on the show Rick Rule. Rick, thanks for coming back on the show.
Steve, it's a pleasure to be back. Thank you for having me back.
Yes, I got a lot of good comments on our last video. One listener specifically said that he watches all your content that he can possibly find, and he liked our interview the best. So that was kind of a neat compliment to you, sir.
That's fantastic. Obviously, you and I have served at least part of a market well. That's great.
Yeah, true that. Okay, I kind of want to get into a little bit of a macro view to start out, and then we'll go down the listeners requested your natural resource stocks, just your take on some companies. I got the list of them here. And but first off, when do you think the Fed is going to stop hiking rates? I just had Jordan on the show, and he, is Jordan. He's really into the precious metals, and his argument is that if past is prologue, generally speaking, when the Fed stops hiking rates, that's usually a catalyst for the metals.
That is correct. When I say that, I've been through two prior incidences of that I can remember, one being in 2002 and the one before that being in 1975. In both circumstances, pardon me, the Fed had embarked on a period of tighter interest rates, which helped the dollar, hurt gold, and in both cases, the impact of higher interest rates on financial markets and on the economy was such that, to be charitable, the Fed blinked and actually reversed courses. And in both cases, that was very good for gold. As to the primary question, which is to say when, I'm embarrassed to say I don't know the answer to that, although the cynic tells me before the next election cycle. Sort of an offhand comment, on the other hand, sort of an offhand comment based on 49 years of watching the interplay between politics and policy. It would appear so far that the Fed has gotten away with higher interest rates. People who are paying higher rates for consumer loans, higher rates for their mortgages, watched the stock market decline and the bond market, the long bond market decimation, may not agree that they've gotten away with it. But the truth is that it hasn't thus far negatively impacted employment very much. And it hasn't even very much impacted the consumption of, in particular, consumer durables, like automobiles and used cars. I also personally applaud their allowing the interest rates to rise. Artificially low interest rates are a policy tool to benefit spenders at the expense of savers. Now, this economy doesn't need more spenders, although people would like to be spenders. It needs more savers. And the idea that you grow an economy by reducing capital formation is sort of stupid. People need to understand that increasing interest rates, among other things, reduces the capitalizations of public companies in the stock market. In the first instance, higher interest rates increase their cost of capital, which reduces their margins. At the same time, it devalues the income stream, the dividends, because they're competing against savings products, which are suddenly yielding more money. So when your margin compresses and your multiple compresses, obviously it's not good for equities prices, which of course we've seen in the S&P 500. How long the voters, who are comprised more of spenders than savers, allow the politicians to have a sense of humor for doing the right thing is a very, very open question.
Yeah. So generally speaking, if you tie the interest rate and its relationship to the price of precious metals. If people can get a bigger return percentage-wise on a different investment, gold doesn't really pay anything. So that's kind of where the money moves. Is that the general
Well,
logic?
that's part of the question. Despite the fact that we have higher interest rates, we still have a very large negative interest rate right now. The incentive that somebody might have to buy a long bond, let me rephrase that. The perceived incentive around buying a long bond implies either insanity or a lack of facility with arithmetic. So it's really the real interest rate that matters more than the aggregate interest rate in terms of disintermediation out of gold to yield products. It is true, however, that raising interest rates in the United States leads to increased dollar strength and leads to an in-migration of capital from places like Europe and Japan that are even more challenged than the United States is.
Okay. Maybe that's why the Dixie's doing so well. The dollar's performing well against.
I think for two reasons. One, the increase in interest rate helps. But as Doug Casey famously says, the US dollar is the worst currency in the world with the sole exception of every other one. This isn't to congratulate the dollar. Maybe I'm damning it by faint praise. But when I shake my head in wonderment as to what our own politicians are doing, and then I compare them with politicians in other places, suddenly I become a little more tolerant. Not tolerant, not very tolerant, by the way, but a little more tolerant.
Just slightly more.
Yeah, that's right.
Okay. We've talked before about water rights, and you mentioned that over the course of decades we've mined water.
That's right.
Can you kind of expand on that and go into water rights? I'm specifically thinking of like J.G. Boswell, Limonera, like that kind of. Water value is different depending on where it's located, correct?
That's right. It's important to know that the thesis around, in particular, J.G. Boswell, has been that they're very large private water rights owners in the state of California. And someday they might be allowed to, rather than use the water for losing money growing subsidized cotton or tomatoes, sell the water, pardon me, to users in Southern California who would use it for, brushing teeth or flushing toilets. In other words, that money might flow, water might flow downhill to money rather than uphill to votes. Understand that in most of the world, water use is prescribed politically, not economically. And the United States is no different. Right now in California, as a consequence really of the Owens River grab by Los Angeles, water is available to be sold given its deeded use, which is to say that agricultural water can only be sold to agricultural users. This is really silly, unless you happen to be a farmer, in which case you enjoy a subsidy for water. I happen to fall in that category, by the way.
It makes it a lot cheaper for farmers.
Yeah, I'm criticizing myself in this context. But the truth is that, as an example of the water that is consumed by human uses in California, about 85% of it is used for agriculture, and that generates about 2.5% of the state GDP.
Oh, wow.
The allocation of water was set in the legislature 70 or 80 years ago when rural interests, that is to say the farming interests, were the most powerful political interests in California. My belief is that the current drought may begin to cause a shift in that. I'm hoping, I guess, that the Cadillac commies in West LA and West Orange County and stuff like that will look at the $150,000, $200,000 worth of landscaping they have around the house wilting and begin to say, I wonder if we should be growing rice in the desert or if I should be allowed to water my roses. I don't expect them to do the right thing for the citizenry, but I suspect they might do the right thing for themselves, which would be to deregulate water. Water is certainly, as far as I see, the most mispriced and underpriced commodity in US markets. It's also, to quote a strange phrase, illiquid, which is to say that there are not very many water investments because of the political dog's breakfast associated with water markets. 35 years ago, when I first entered the water market, water rights, perpetual water rights, were very, very, very cheap. And I was a fairly aggressive participant in that market. That's all changed in 35 years. The big corporate farmers, even some of the hedge funds like Texas Pacific Group, have been aggressive buyers of water rights. And so these days, they're extremely easy to sell, but extremely difficult to buy.
Yeah. Now, so when you're saying that the farmers get it cheaper through subsidies, essentially like water's calculated on acreage, right? They say 1 foot of water for an acre of land.
That's correct. An acre foot's about 365 gallons of water.
Okay. And that is, does the government pay them the difference in water? Essentially, our taxes do?
No, it's just that the government controls so much water. So as an example, if you are part of an old public irrigation district that has provisional water rights to a flow of water, say the Sacramento River,
okay,
the use of that water is constrained to agriculture, which is to say the farmers never have to fight the cities for the water. So water that can be titled municipal, as an example, Carlsbad, California, has built a desalination plant that delivers water for about $1,000 an acre foot. Very often, water in places that are fairly dry, like Kern County, Fresno County, Modesto County, Kings County, the winter water price for that water can get down to $100 an acre foot.
oh,
The summer price can get down to $400 an acre foot. The difference between $400 an acre foot and $1,000 an acre foot is a function of politics, not water. Might take $100 an acre foot to get that water from the Central Valley down to San Diego. The rest of the premium, the other $500, is all politics.
interesting. Okay. In my mind, and I'm probably just naive, it seems to me like just water should cost the same for a guy taking a shower as a farmer growing tomatoes.
The farmers
tomatoes are going to get significantly more expensive, correct? But that would
California farmers are a very sophisticated lot. You know, that picture of American Gothic doesn't represent, in particular, the big family farms in California. They're extremely aggressive actors politically. They are very good lobbyists. They spend an awful lot of money. And if you follow the old Mencken, I think it was Mencken's thesis that elections are actually advanced auctions of stolen property, the farmers are often high bid because water is critical to what they do. How much money you spend to flush your toilet is less of a concern to you because you're not trying to grow 1,000 acres of rice or asparagus in the desert. So they play the game very hard, and they play the public opinion game very hard too. By the way, I am one, so I'm criticizing myself in that context. When I say I am one, I'm an investor. They point out in bumper stickers and stuff like that that without water there isn't food, neglecting to point out the fact that they are often subsidized at the state level, then subsidized at the federal level, and then subsidized with regards to water. Without pointing out too, despite the fact that we have real food inflation, that the percentage of the average household budget accounted for by the food bill has fallen from 30% to 15% during my lifetime, which is to say food in a historic sense, despite the fact that there's much more value added today. Chopped up lettuce, prepared foods. I mean, stores sell solutions, not groceries these days.
Yeah, you can actually buy shredded cheese instead of taking 30 seconds to make it.
Despite the fact that all that's happened, food costs half what it cost in my youth. So, I think those arguments are fairly disingenuous. This will, by the way, get you and I a ton of hate mail from rural interests.
All right. Natural resource stocks. So anyone that wants to can go to Rural Investment Media and submit their natural resource stocks, and you will personally rank them. 1 being the best, 10 being the worst, and you'll give your opinion where you think it's warranted. Stick to natural resource stocks, no pot stocks, no crypto, no, oh, I'm forgetting one, technology.
Nothing but resource stocks.
Nothing but resource stocks,
Yeah,
yes.
I've gone through the top offending categories, which is to say narcotics, crypto, and tech. But
Okay, I got, after we weren't able to do it on the last one, I thought that might make for a interesting show this time. And so I got some from listeners. I threw in a few myself.
great.
Okay, so starting off with some of the big companies, what is your thought on BHP?
I need to give you a disclaimer with all of these. I
Okay.
think in the very near term, the natural resource market's going to be soft. I think a stronger US dollar is going to reduce inflation fears. I think, too, that commodities got ahead of themselves. I think 5 years out, without a really vicious recession lowering demand, that we'll have supply concerns across most industrial materials. So people need to understand that my recommendations are for a patient contrarian investor like myself. My outlook, my orientation, my risk tolerance may be very different than those enjoyed, if that's the right phrase, by your audience. As to BHP, the company is absolutely swimming in cash, a wonderful attribute.
Yeah.
They have more cash available to them than they actually have uses for the cash. And increasingly, they're being polite and returning the surplus cash to its owners by way of dividends and buybacks. Two, very recently, the company separated its mining business from its oil and gas business. You are too late now to buy BHP to enjoy the Woodside spinoff, but that was something that was tremendously beneficial. For long-term patient investors, BHP being the largest mining company in the world by revenues, and being one of the absolute dominant iron ore producers in the world, is something that has to be in a portfolio. That doesn't mean it can't go lower before it goes higher. It also is contingent on the fact that a buyer in the near term is of the opinion that a recession, if we suffer one, won't be long-lasting or dramatic. Understand that supply shortages imply continued demand, at least at current levels. If you take demand off a cliff, obviously supply can falter and price won't change very much. I should note, for purposes of the answer, that I am an owner of BHP. In other words, I am a shareholder here. So in some senses, I'm talking my own book.
Yeah, they recently bought Woodside, correct? All of a sudden,
No.
I got shares in.
What they did is they vended their oil and gas assets into Woodside, and then they distributed out the Woodside shares to BHP shareholders.
Okay. Okay. All right. Okay. What do you think of? Oh, if you had to give BHP, now I understand this is a snapshot in time. Got to give it a number.
I have BHP as a 4. If I
Okay.
wasn't as concerned about the iron ore price dropping, I would have BHP as a 3. If you looked at BHP simply in terms of project, pipeline, return on capital employed, free cash generation, and price, BHP is a 3, verging on a 2. And that's a very high ranking from me.
Yeah. Yes. I know. You've humbled my portfolio several times.
Well, understand that with resource prices falling, the rankings database is being readjusted upwards. I find companies more attractive when they're cheaper. For some reason, many people feel differently.
Yeah. Yeah. Okay. Vale, steel down in Brazil.
Same thing. I have it as a 4, probably deserves to be a 3. Vale is statistically very cheap. It's also a company that's beginning to come into focus as a consequence of its nickel, platinum, and palladium assets. Nickel, copper, platinum, and palladium assets as a consequence of the possible embargo against Russian supplies from Norilsk. The chief joy in Vale and the chief negative is their very strong iron ore operations. Iron ore prices have held in better than I had ever dreamed they would. And a really substantial part of the free cash that makes Vale so attractive is a consequence of continued high iron prices. I'm sorry. I also own Vale.
Okay. Total. How do you feel about Total?
I'm not a Total owner.
Okay.
Total has some strategic advantages in the sense that they receive unusually strong support from the French state, in particular from this French, the equivalent of the French State Department, and they're particularly strong in French West Africa. Statistically, Total is cheap, and statistically, they have been a decent exploration and production company, an upstream company. The difficulty I have with Total has always been their return on capital employed, their capital allocation decisions, and the fact that although they're reliant on the French state seems to be reliant on Total too. I'm never sure whether the Total management team believes that they operate at the behest of the state government, the government of France. In other words, I'm not always sure that they're working for the shareholders as opposed to for the voters.
For the government.
I don't own Total.
Okay.
I have it as a 5, despite their long-term capital allocation track record, which is not good. Statistically, they're very cheap.
Okay. Okay. I know you like Chevron and Exxon.
I like them less because they've done better in price relative to the rest of the market. A year ago, I was just sort of pounding the pulpit on Exxon. It was free. And I thought that Chevron's refining capabilities would come in useful in a market where refining capabilities are becoming increasingly scarce. All that's happened, but the market has rewarded them. In the last 3 or 4 weeks, they've certainly gotten cheaper, followed the oil quote down. But Exxon in particular has been a spectacular stock market performer in a very, very, very poor stock market. I have downgraded both Exxon and Chevron to 5.
Okay. Okay. Rio Tinto.
Rio Tinto, I also have as a 4. I like it. I don't like it as much as I liked BHP. Rio Tinto traditionally has been a very strong exploration company because they're willing to stay in the exploration game through thick and thin. When I look at their project development pipeline now, which is to say, when I look at the reserves and resources that I think they can bring on in the next 10 years, the outlook gets skinny. When I look at their return on capital employed, again, particularly from the iron operations, I mean, statistically, the stock's a 2. But I'm concerned about the fact that if I can't see visible increases in production in the pipeline, I'm concerned about the durability of that free cash flow, the durability, if you will, about that financial virtue.
We already briefly talked about it, although not in this sense. J.G. Boswell.
I'm a long time Boswell holder. And for people who have my time frame, which is to say infinite, not that I'm going to live forever, but then in that circumstance, J.G. Boswell is cheap. It's one of the largest owners of agricultural land in California. They have been a superb, albeit opportunistic real estate developer, developing, among other things, Otay Mesa in San Diego, the Inverness Business Park outside of Boulder, Colorado. They were one of the original founding shareholders of Del Webb, the Sun City developments. And I believe that they are the largest private water rights owner in the state of California. The thesis has always been, to me, that the highest and best use of the water in the west part of the Central Valley has been shipping it to LA, not growing cotton in Tulare Lake. And the amount of surplus recharge, which is to say the amount of percolation that Boswell enjoys in the Tulare Lake aquifer and in other water jurisdictions that they control, is really spectacular, tied to a 200,000 acre plus land estate, which is to say this isn't state water, this is their own water. Yeah. That usefulness has always been increased for me by the fact that the California Canal the principal method of transporting water in California is adjacent enough to them that it runs over their territory. Now, when California politics will change to the extent that rural water can be voided for urban uses, in other words, a free market develops in water, is anybody's guess. But if it's ever going to occur, provided that the drought that has California locked up now continues, it's going to be, it's now or never, I guess is what I'm trying to say.
Okay.
It might be that the state of California, it might be that Governor Newsom decides, the farmer shouldn't have this water and the consumer shouldn't have it either. I should have it, and I should allocate it in a way that gets me voted back into office. That's always a risk.
Okay. And I don't know if Google was right or not, but from what it said, this company owns like 1% of California's water. Does that seem extreme or?
Oh, I think it might be more.
Wow.
I think it might be more. Boswell has wisely not publicized the recharge capabilities of the Tulare Lake Basin because I think they're probably afraid that they will lose access to other sources of water, which they enjoy. When I used to go to annual meetings of Boswell and question them about water, they would thank me for the question and move on.
Thank you, Mr. Rule. Next question.
Yeah. Mr. Rule is thanked and excused. By the way, they're great guys.
Okay.
The fact that they considered me impertinent and less than useful is understandable.
But you still own them.
Yeah, I do.
Yep. Okay, let's see. Moving on to gold. I guess generally speaking, correct me if I'm wrong, I look at the royalty and streaming companies as kind of like the safest bet, I guess, across the gold sector. Is that accurate or am I off?
Safest and also in many senses the best. Those operating margins, 80% plus, a business where your gross is your net is a very good thing. And what people seem to forget, at least about the long established royalty companies, is that the royalty and streams cover very big deposits. That's important because big deposits generally yield big surprises, while small deposits usually yield bad surprises. So the royalty sector is at once the safest and often the best sector in the mining business. It's the least volatile. If you're a low-cost producer and the price of a commodity goes up, ironically, your margin increases less than the margins associated with a good, with a marginal producer. So it's ironic that maybe the finest mining company in the gold business, Franco-Nevada, might offer less speculative upside than consolidated orangutan explorations or something that otherwise wouldn't merit consideration at all.
Okay, that was my first one on the list was Franco-Nevada. What number would you give that? Best of the biggies?
I think Franco's a must own. I have it as a 4. Statistically, it's not cheap. It is extraordinarily high value, and it belongs in every gold portfolio, but particularly it belongs in the starter portfolios. Okay. It's important, I think, for your listeners who are new to the space to understand that a gold equities bull market, whenever one occurs, they're truly spectacular events. They're 200, 300, 400, 500% gains in 5 or 6 years. That's the market beta. That's the divergence between the gold equities market and the general market. What many people do is they try to take a lot of risks to get better yields than that. And sometimes that's crazy. If you think that you can enjoy a 300% gain or a 400% gain in a sector, the right thing to do probably is to accept even a slightly less return in return for throwing away a whole bunch of the single company risk. And in Franco, you throw away all of the single company risk.
Yeah. Next, wheat and precious metals. Would that be your second one in the
Absolutely.
base? Okay.
Absolutely. Growing faster, in fact, than Franco, although they have very high quality assets. Their assets are of lower quality than Franco's. Wheaton is extremely still run. It's well run. It's run by Randy Smallwood, who's one of the founders. It's important to note that he's presided over taking that from 150 million market cap to adding a couple of zeros to that. Been a spectacular job of stewardship.
Yeah. Okay. What number would you give them?
I have them as a 4 as well.
Okay. Sandstorm.
Sandstorm is one of my favorite of the juniors. They recently, in a very large transaction, scaled up, but I'm going to suggest that they paid a very, very, very full price. But they paid a full price in a fairly competitive market. It's also true that you need scale if you're at Sandstorm's level. You need to increase your market capitalization. You need to increase your trading volume so that you can get added into the equity indexes in the US capital markets. That's the whole game.
Okay.
They have a wonderful range of assets. Remember, these guys aren't Johnny-come-latelys. Nolan Watson used to work for Randy Smallwood, Silver Wheaton, so he was very, very, very well brought up. And he's done a good job building that company over 15 years. The consequence of that is that many of the royalty companies who acquired their royalties at very, very, very fancy prices over the last 3 or 4 years operated at a disadvantage to him with regards to price relative to value.
Okay.
I own them. I own them, by the way.
You do. Okay. Okay. They also a 4 or maybe
They are also a 4.
Also a 4. Okay.
I have them at a 4 because my near-term outlook for the gold price is, not necessarily attractive.
Yeah. Yeah. What are you thinking? 1675 or?
I don't have a clue.
Okay.
I don't have a clue. But I had not thought that the Fed would get away with raising interest rates as aggressively as they have. And although I'm delighted to see it, I can see how higher interest rates propels a stronger US dollar, more faith in the US economy, and less of a perceived need among investors to be in gold. I think it's a timing question, as we've said earlier, but I understand that.
Yeah. Yeah. Okay. Look, I'm more of a technical investor, I guess, but GDX and GDXJ look kind of nice. They came up back on my watch list when they hit a certain level, and that blipped this morning. And what do you think of those two?
There's a lot to be said for investors who have lives, who don't want to spend 1 hour per month on every stock in their portfolio, to simply own the indexes and relax. The difficulty I've always had with GDX and GDXJ is that I would pay somebody a management fee to own some of the companies in those indexes, which I wouldn't own with my own money with a straight face. The idea that I'm paying somebody a fee to buy stocks I wouldn't own bothers me. It truly bothers me. But for an investor who's going to have $20,000 in the space, $25,000 in the space, and for whom that isn't enough money to allocate a whole bunch of time and attention to the space, those are good alternatives. If you believe, as I do, that the sector over 5 years is going to give you, 2, 3, 4 to 1 returns, and you don't have the time to develop specific knowledge yourself about the companies in the space, at least participate in the space. Buy the indexes according to your risk tolerance, relax. Sell them when you see the interest rate on the US 10-year Treasury go positive after inflation.
I'd have a long wait.
Might be the 12th and ever.
It might be. Okay. Moving on to silver. First Majestic. What I know this has been an amazing one for you over the term. How do you feel about him now?
Keith's a very good friend, and we go back a very long time. I don't own First Majestic now because I got to see him turn around Jarrett Canyon. He's going to make me look like an idiot. I'm sure of it. I'm sure I'll be sitting here waiting for him to do something. The silver price will go up. And at the end of some quarter, Jarrett Canyon will have turned around without my knowing it. Right now, he's producing gold at a cost somewhere in excess of $2,000 an ounce and selling that gold for $1,700, which is not a lot of fun. He has a great history of buying big deposits that have been cash starved by their former owners, and this is certainly the case with Jarrett going back 12 years, rethinking the deposit, injecting really substantial amounts of capital into the deposit. In other words, reworking the deposit, lowering the operating costs, and really, truly turning these things around. I got to see him do it with Jarrett Canyon before I can afford to own the company.
Okay. Pan American Silver, they have a couple of mines right now that that aren't really that aren't up and running, but they're not really priced into the stock. Am I missing something, or is
That's correct?
Okay.
Pan American is probably, all things considered, my favorite silver stock. Now, your listeners need to know, I wrote one of the first checks in the incorporation of Pan American Silver, going all the way back to 50 cents. I've been with the company a very, very, very long time. It is also true that it's less leveraged to silver prices than it used to be. At current prices, about 55% of the revenue comes from gold, not silver. Additional risks are that the silver production is primarily from Peru and Mexico, two countries, pardon me, where the internal politics are in, let's be polite and say, disarray. So there are political risks. The good news, I guess, is that they generate tremendous amounts of free cash. Ironically, right now, a lot from the Canadian operations and from a gold operation in Peru. But the most important thing for me is what you touched on. They have two deposits, one in Guatemala and one in Argentina, that are each 500 million ounce high-grade deposits that aren't in production. One of them is a former producer. And if either of them returned to production, they would double Pan American's production. Pan American, particularly in Guatemala, has been deeply involved for the last 2 years in community and political relations. And my read of the Guatemalan press is that internally in Guatemala, they expect that Pan American will be allowed to return that mine to production within 18 months. And I don't think it's priced in the stock at all. I also note that in Argentina, the state in Argentina that they're involved in recently has seen a move. The state has banned the use of cyanide in precious metals mining operations throughout the state, primarily to stop one particular mine that's adjacent to a ski resort. There has been a political move in the state to exempt operations from that edict that aren't considered to be critical to the water, which in other words means they're far from where rich people live. Yeah. And if that occurred, it could be that Pan American would also be allowed to put that mine in production. And if you added 1 billion ounces of reserves and the sort of production profile that you would see from that, I think what you'd see is a tripling in revenues and a quintupling in earnings without a move in the silver price. If you combine that with a move in the silver price, which I think is more likely than not, Pan American has unusual upside relative to the risks, which are fairly low for the mining industry and certainly low for the market capitalization.
If you had to give it a number, what would it be?
I upgraded Pan American 2 days ago to a 3.
Okay. All right.
Based mostly on share price deterioration.
Okay. All right. Getting into the weeds here, some of the juniors. Some big news recently with Rio 2.
Yeah.
Alex Black's Phoenix project. He had some just a hiccup with the with politics. I don't know how plugged you are into that. I've been trying to get him back on the show. I can understand why he probably doesn't want to talk right now. What are your thoughts?
I'm a huge fan of his, going back a very long time. And I've been around the deposit a very, very long time. Obviously, the Chilean government didn't do the Chilean people any favors with that decision. They certainly didn't do Rio any favors. If you are going to have a hiccup, this is a wonderful time to do it. I see the gold price being higher a year and a half from now, a year from now than now. And if you're going to have that fight, this during a time when you probably wouldn't otherwise be able to advance the project is a very good thing. You will note that the ruling doesn't prohibit Rio 2 from continuing to do exploration, delineation, and engineering work. It denies them an operating permit. And my suspicion is at $1,700 gold with their market capitalization, they would have had a difficult time financing Phoenix without an upgraded bankable feasibility study, which this will give them time to do. That notwithstanding, the incredible deterioration in the politics in Chile around mining and the sort of tenuous nature of Rio's rights there has led me to downgrade the stock, despite which I still own it. I'm a big fan of Alex, and I'm a big fan of big deposits. So I've chosen to ignore my own rankings. In this case, my greed overwhelms my fear.
The risk is worth the possible reward.
For me, understand, if I lost 50% from here, it wouldn't be the first time in my career. It wouldn't change my decision as to what to have for breakfast. And I understand that taking big risks in speculation is the price that one pays to get big rewards. I'm able, both financially and psychologically, to do that. Many people aren't. Don't use money you had set aside for a child's college education in a name like that.
Yeah. Okay. BlackRock Silver.
I don't know enough to comment.
Okay. Cassiar Gold.
I haven't done enough recent work on Cassiar to comment. It is in several of the Sprott funds. They are going to be at the Natural Resources Investment Symposium in Boca Raton, and I have a date to sit down with them and get updated. So if you ask me the questions in 3 or 4 weeks, I'll be better able to answer.
Okay, cool. Silvercrest. How do you feel about Silvercrest?
Love it.
Okay.
I love it. They did a great job discovering this deposit. Of course, it's the second big silver deposit in the neighborhood that they've that they've discovered. Unusually for explorationists, they put the thing in production without a hitch. It isn't at nameplate capacity yet, but it's pouring silver. And they did a very credible job with regards to both time and budget, in particular the budget, in a circumstance where supply chain inflation has wreaked havoc on a lot of deposits. My understanding is they had their first silver pour last week, and they were rewarded for an amazing track record of success with the stock selling off.
Yes. I saw the same thing.
I love stuff like that. There's nothing in the world that makes me happier than having a fairly high conviction stock go down in price. So I've upgraded it to a 3 as well.
Okay. All right. I was going to place another bet, and I just wanted to ask you first. I'm like, what am I missing? They just poured and it went down. Okay.
Listen, it can go lower before it goes higher.
True.
You know, don't.
Yeah.
You know, the ramp up period is risky.
Okay.
I believe the silver price could go lower. There's no reason in the world why Silvercrest can't go lower, but sometimes stuff is cheap enough, you know?
Yeah. Okay. All right. Uranium. I have SPUT written down on here. I guess I'm more curious about your number on it than anything else.
I have a 4 on SPUT. It's probably the least leveraged to the upside, but it's the safest play in the uranium space. I absolutely believe that uranium won't just go through total cost numbers for global production, but it'll go through the incentive cost, which is to say $75 a pound. If you believe that over 4 or 5 years, something will go from from 47 to 75 with little risk, not very exciting, but that's the way money's made.
Yeah.
You know, taking on high probability, high pay circumstances is a very good thing. Note that I'm both a SPUT shareholder and I'm the largest shareholder in Sprott, which is the manager of SPUT. So I'm talking my own book every which way.
Some guys at work and just friends, I look over their Roth IRAs and offer suggestions where I think they could be useful. And I've been getting thrown a lot of people are starting to check their quarterly statements and learning what the S&P 500 is. And I've been throwing them in. You can't buy the spot on these, or at least not in the brokerages they're with. So I've been throwing them in URNM. Does that seem like I figure it's got a 15% allocation or so to physical
Yeah,
through yellow
I have
cake
the same,
yet?
I have the same comment about that. For people who aren't going to do the work to get to know the uranium juniors, pardon the pun, but uranium is so explosive to the upside that I think you need to participate. So if you're a $10,000 investor or a $25,000 investor, and you have a life, you have a job, you have a family, stuff like that, you can't spend tens of hours, per month studying uranium stocks, then buy the URNM. I would prefer that passive investors owned SPUT as to half the portfolio and URNM as to the other half of the portfolio, to juxtapose sort of the volatility with the stability. I would tell your friends too that are at a brokerage firm that can't buy them SPUT that they might consider changing brokers. Sprott can certainly process a trade in Sprott.
Okay. Okay. Kazatomprom. It's got some, how did Justin Hughes say it? He said it's got some hair on it. There's a little bit of risk there. How do you?
Thus far, the risk has been more apparent than real, which is to say, I've interviewed, including at my uranium boot camp, Kazatomprom officials, and they report no difficulty with regards to sanctions getting consumables into Kazakhstan or shipping uranium. I would say that the company has two problems. One is the perceived closeness, however real or unreal, between Kazakhstan and Russia. And the other is the fact that most Western investors can't spell Kazakhstan. By any qualitative or quantitative measure, Kazatomprom is the cheapest uranium stock on the planet. They're the largest producer in the world. They're the lowest cost producer in the world. They have the best development pipeline in the world. They are extremely well run. They generate the best cash margins in the uranium business. I mean, ni plus ultra. That doesn't mean that when money comes in the uranium space, it's going to go into Kazatomprom. I think the generalist money will go into Cameco, because the managers are more interested in not losing their job than they are outperforming their competitors. Kazatomprom is clearly the class of the league, but it's challenging.
Yeah. Okay. Okay. Getting into the weeds on uranium, Boss Energy.
Boss?
Mm-hmm.
I own it. High quality people, high quality deposit, more political risk in Australia than people understand. There's a strong element to Australian politics, particularly the Labour Party, that has carried over in something called the three mines policy, which is the suggestion that Australia could only have 3 operating uranium mines at one point in time. Mercifully, the Aussies are sobering up enough to understand that that probably isn't a good policy in the context of things like carbon generation. But there is still substantial domestic political opposition, to uranium operations in Australia. If they can overcome that, this is a high quality, discrete deposit, one that gets better if you put money into it. In other words, you get bigger, but it's already pretty good. And it's run by high quality people. What I hope happens to Boss, and what I hope happens to a bunch of the companies that are viable juniors, is that they merge and form bigger companies. What holds Boss back has been lack of access to capital outside of Australia. And they need to be part, I think, of a bigger company with the New York Stock Exchange listing and access to an at-the-market financing mechanism. And mercifully, I think that the management team at Boss is at once smart enough and honorable enough that they will ultimately do what's in shareholders' interests.
Shares are in the Billions. That's very common for Australia. Is that correct?
Yeah. I mean, I think Australians went to extra digits in their calculators way before we did. They seem to be very fond of large numbers of low price stocks. I think that goes back to the dealer community. I think if a stock is a dollar stock, that the bid and ask spread might be a dollar by $1.03. A 10-cent stock, it might be 10 cents by 11 cents, which means that the market makers scalp the retail investors for 10% on the trade, as opposed to 2% on the trade. And obviously they prefer that. I'm making this up. I don't know that that's the case.
Okay.
But I've wondered for years why Australian issued and outstanding companies always seem to have a 0 or 2 compared to companies in the rest of the world.
Yeah. Okay. Uranium royalty. You, Roy.
Fantastic people. It's too early to say what the company's going to look like because they haven't deployed enough cash yet. I own some stock. I've sold enough stock that the stock I have now is free. I call that the point of no concern, as opposed to the point of no return, which is what happens too often in these small stocks. They raised a fair bit of money. I want to see them deploy the money. This would be a really good time to deploy the money. There are a couple of transactions out there to do. They're not alone in wanting to do them. But it's too early for me to say with regards to uranium royalty. Right now, it's very high quality people. By the way, people who have invested tens of millions of dollars in financial public relations. So they have a huge cult that will support them if they do something good. Now we need to see them do something good.
Okay, it's on them. All right, last one. Uranium Energy Corporation.
UEC is run by the same people as uranium royalty. And in that sense, I think they've done a very good job consolidating assets for a very long time. I think they benefit too from the fact that most of their assets are US-based assets. And while from a fundamental point of view, that isn't particularly attractive, this is a high-cost destination. They are on the other side of the Kazatomprom paradigm, which is to say American investors are ethnocentric. And American investors believe, for some reasons I can't fathom, that uranium from Texas or Wyoming produces better power than uranium from Kazakhstan. My own prejudices notwithstanding, the fact that our president, Mr. Biden, I use our advisedly, but our president, Mr. Biden, has gone from being stridently anti-nuclear to deciding, ironically, to loot $4.6 billion from US taxpayers to support the domestic uranium business. That tells me, if nothing else, that the polling data suggests that nuclear in the United States has gone from wildly anti-nuclear post 3 Mile Island to the point where the Democratic Party establishment at least believes that the taxpayers would tolerate $4.6 billion being stolen from them and given to the uranium industry, which suggests to me that the political popularity of uranium in the United States is high.
Getting better. Okay, awesome. Well, thank you, Mr. Rule. This was a lot of fun. And if the listener wants to do the same, he can go to ruleinvestmentmedia.com and you will personally review them yourself. Let's talk about Boca Raton.
Love to. Some of your listeners will know that I have put on the Natural Resources Investment Symposium. I believe this will be the 30th year. For 27 of those years, it was in Vancouver. For 2 years, it was in COVID land, which is to say online. But we're returning to a live conference this year. We won't do it in Vancouver because we're concerned about public health challenges and the political response to those challenges in both the United States and Canada. And so this year will be in Boca Raton, Florida, July 26th through 29th. Why go to the conference? Well, first of all, we stood the test of time. 30 years of consistent profitability means that we have delivered for our attendees over a very long period of time. We're not Johnny-come-latelys to the education business. The second reason is that we've assembled a marvelous faculty, particularly with regards to global macro. The Daniela DiMartino Booths, the Nomi Prinzes, the David Stockmans, the Jim Rickards, the Doug Caseys, the Grant Williams. I mean, just a great, great, great group of thinkers who can put the world in a context for you that you will not get from CNBC or the Wall Street Journal. Beyond that, in addition to having your view of the world shaped or changed, we will have the best gurus and analysts that money can buy. So once you've decided sort of on a strategy, we'll provide great tactics for you to turn that big picture information into gains in your account. More importantly for that, and unique to our conference, I think, is that for 30 years, we've had a feature called the Living Legends. These are people who have built multi-billion-dollar natural resource companies from scratch. And they tell you how they did it, how they had to react in various market conditions, how they were contrarian, how they were patient. And what's important about this is they put it in the context of how it's made them better investors and how the lessons that they've learned building these multi-billion-dollar companies can make you a better investor too. Critically, at a live conference, I've done this. You can follow these guys at a discrete distance around the exhibit floor and see which exhibitors they stop in front of and talk to, who makes them frown, who makes them smile. I would guess myself that following Randy Smallwood from Wheaton Precious or Robert Friedland around the exhibit hall is worth the price of admission all by itself. The fourth thing that people need to pay attention to is that at most investment conferences, the conference promoter regards the exhibitors as paid advertisers, which is to say revenue. And the qualification for most exhibitors at a conference is simply a check that cashes. At our conference, these companies need to be owned in accounts managed by myself or by Sprott, or in my own account. That doesn't mean, sadly, Steve, that every stock I buy goes up. Far from it. What it means is that every single exhibitor has been vetted. If we don't know them well enough to have our own money in them, they can't buy a booth. The upshot of all that, 30 years of experience, great faculty, great exhibitors, is that in this or any other investment education product that I sponsor, if you pay the tuition to come to the conference and you don't believe you got your money's worth, you get a 100% cash refund, no questions asked. I would prefer that if people ask for a refund, they tell me what I could do better so that I can learn for next year. But I can tell you too, in 30 years of offering unconditional money back guarantees, I've had to refund less than 0.1% of the tuition revenues that I've received in 30 years. So it ends up as a consequence of the quality of the product being a de minimis risk for me, but I remove the risk for the attendee.
Over 999 out of 1,000 are totally satisfied.
Correct. Correct. And you know, the Uranium boot camp, which we just got done, I had 3 or 4 requests for refunds that had to do with the fact that there was too much information, that the person requesting the refund didn't have sufficient expertise to take advantage of the content. And in that case, I happily refunded the money. I mean, the idea is that I don't want people merely to be happy. I want them to be ecstatic coming away. And although I think, well, I was frankly pleased. It wasn't, they said it was a lousy course. I didn't learn anything. It was, I was looking for a straw and you gave me a fire hose in terms of information. So
that's a high quality problem. Yeah, I loved your Uranium boot camp. That was the best class I suppose it's one of the only ones, although I watch a lot of webinars and stuff on Uranium. But yeah, very, very good class. That was a lot of fun. Okay, so Boca Raton, is it possible to do it virtually? I know the value
there will be a virtual component this year. So if you go to the website and you want to know about doing it virtually as opposed to attending it in person, yes, absolutely, we can do it. And that's been important. We've been able to add people to our conferences in 32 countries in the last 2 years. People who would love to have attended live but couldn't attend it. I have to say, while I like the economics of virtual conferences, and I love being able to present them from home without having to travel, I've missed the live conferences. I've missed the ability to go in the harbor cruise with the speakers, ask them questions in an informal setting over a glass of wine. I've missed the workshops. I've missed the spontaneous questions and answer. And in particular, I've missed the ability, which I described before, of following some of the speakers, like following Doug Casey or following Robert Friedland, or following Randy Smallwood around the exhibit floor, listening in on some of the questions that they ask. That simply isn't available with my level of technological sophistication online.
Yeah, might be kind of creepy following them around with an iPad. Right on. Well, thank you, Mr. Rule. This was a lot of fun. I'm hoping that I'm able to make it out for Boca Raton. I've got some work commitments, but if nothing else, the virtual.
Well,
But
we'd prefer it. We'd prefer to see you live, as the First Majestic people, Keith Newmeyer, point out. It's very difficult to have a drink with me on the Intercoastal Canal virtually.
yes. Right on. Okay. Well, thank you, Mr. Rule. You have a great rest of the day, sir.
Pleasure. Thank you. And Rick, please. I'm at 69, feeling too old anyway. So, okay.
Take care. If you want to meet Rick in Boca Raton or attend virtually, there is a link in the show notes. Please like and subscribe. We have almost 15,000 hours of views, and we are approaching 1,000 subscribers, a milestone in YouTube. Thank you for tuning in. We'll talk to you next time.